From Tokyo to London to New York, stocks sold off at a fever pitch. It was the biggest one-day loss in the United States in 5 years as investors put their money in gold and government bonds to hedge against Brexit's unknown risks. The British pound plummeted to levels not seen since 1985 as the value of the dollar increased. The governor of the Bank of England says there are plans in place to deal with it.
Her Majesty's Treasury and the Bank of England have engaged in extensive contingency planning, and the Chancellor and I have remained in close contact, including through the night and this morning. To be clear, the Bank of England will not hesitate to take additional measures as required, as markets adjust, and as the UK economy moves forward.
The move is expected to be hardest on the UK economy, but Friday showed that no country is immune to the fallout.
The United Kingdom has 2 years to figure out its exit strategy, and central banks here in the United States, as well as the United Kingdom, say they have enough cash on hand to blunt these pressures in global funding markets. But if there's one thing the markets don't like, it's uncertainty.
Europe is particularly concerned.
The Europeans are quite concerned about the implications of one of the largest members of the EU, in fact, leaving what is a region of, until now, 550 million people, and what the sort of trade arrangements might mean for all of them, but also whether it brings with it some political change.
In the U.S., banking, energy, and industrial sectors are seen as particularly vulnerable.
European Union, largest economy in the world, England, 3% of world GDP, and this is a sort of strike mark against globalization, against a free flow of ideas and people, and I've never seen an instance in history in which we look back on that as a happy time.
U.S. financial regulators held an emergency meeting and will no doubt be watching closely when markets reopen. Kristen, Saloomey, Al Jazeera, New York.